Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk for this Friday, June 18th. Great to have you here with us. I'm your host, Jesse Allen. Thanks so much for joining us here on a Friday as we dive in and get a deep dive into the market trade here for as we wrap up the week here on this Friday for Market Talk. Find us online, markettalkag.com. That's our home on the web, markettalkag.com. You can also find all of our streaming sources there, our Facebook, our Twitter, Instagram, everything. Find us all online. Subscribe to us on Apple Podcasts, Spotify, and more. Our radio affiliates, everything online at markettalkag.com. Well, we have quite a bit to talk about here as we wrap up the week, and I'm very happy to have on today our guest, my good friend Chad Hart with Iowa State University, joining us. And Chad, it's great to see you. Great to talk to you. Thanks for being back on Market Talk with me today.
It's my pleasure to be with you, Jesse.
Chad, we got a lot to talk about, and I think the best place to start is just the immense volatility we are seeing in this grain market. We have a huge collapse Thursday. We come back in here today with just impressive gains that, honestly, in hindsight, was maybe only a little over half of what we lost on Thursday, but still turning this market around on Friday. And, I remember back to when I started my ag career and I heard you speak. This was like maybe a couple weeks into my broadcasting career, and you talked about how, markets go up and markets go down. And we see that over, a few years, not over days and weeks. I mean, this volatility is just, it's so much volatility out there, Chad. And I just love your thoughts on it to start there, because this is wild markets right now.
Well, they're wild markets, but it also points out that volatility is both our friend and our foe. When you think about the events of yesterday and the rundown that we had, and it was, we're seeing rains across the Midwest. We got a export report that was weaker than we had hoped for. And so, that created a sort of a run, the exit for the doors, especially out of our non-commercials out there. And then today, everybody's like, well, maybe it didn't rain as much as we thought it did. And exports are still really, really strong. In fact, at record levels, and we come running back up. And so, yeah, the swings that we're seeing now that used to take months to occur now occur in minutes to days. But it does create not only, challenges for farmers, but also I would call opportunities. When you think back yesterday to the day, what farmers are looking at is if you missed it on Wednesday, you've got another shot again here for it on Friday. That, if you give the market a little time, it's showing you both the upside and the downside potential in the current market.
Very, very true. And, I think one thing we talk about all this volatility, we're seeing the bigger position limits out there from the CME and, the expanded limits out there. And I think one would have to say that maybe a little bit of that human element being gone with all the computer trading is just amplifying this volatility. And what are your thoughts on just, we're a couple months in now to this kind of new sort of market climate with not having, open outcry and things of that nature. Talk about that and how much you believe that, the computers are to blame for some of this volatility possibly.
Well, again, computers may be to blame, but it's also worked in our favor for a lot of the past 10 months. So when I'm looking here, when you think about the movement from the pit trading to the electronic trading, it has accelerated the ability of the market to not only incorporate, news into the storyline, but also, let's call it, incorporating the rumor. So these markets are much more quick to react to pieces of information that come in, leading to that additional volatility that we're seeing in the market. And we also don't have those human circuit breakers anymore that used to be with us in the pit that sort of, let's call it, cushioned the blow when we did get a news story. Like you think back to yesterday, I think, if we're talking about being in the pit when this information's coming in, Yeah, we're down, but we're probably not down quite as far as we were yesterday. In the same instance, though, I don't think we would have seen the rise up today as strongly if we had pit trading as well. So there is, again, the pluses and the minuses here. I mean, in the end, I'm going to tell you that in the long run, that trading, whether it's by individual or through the computer, we're going to end up in the same place long term. But we will have more noise around that given the computerized trading. And I'm going to argue that given that little extra noise, it tends to work out actually in the farmer's favor in the long run. In that gives you actually more bites of the apple when we're a little bit above average in terms of pricing than the older system used to.
Well, Chad, there's a lot of things out there at play. You talk about all the different news stories, and let's dive into some of those. And I think one of the biggest ones of the week, outside of weather, we'll get to that in a second, was some of that hawkish news from the Federal Reserve. That really sort of amplified our move. That was the kind of the piece of news that really shot us downward on Thursday. And I know you follow closely along with the financial markets as well. I mean, talk about some of that news from the Fed and how that's playing into our commodities and our ag sector moving forward.
Well, if you think about what the Fed has said, I mean, they've been slowly trying to build up this narrative of, hey, interest rates have been low for an incredibly long time. Eventually, we're going to have to raise interest rates, especially as we are starting to see, inflation, and around the edges. And, in talking with farmers, especially, we have seen definitely that price inflation in our commodities. We have been enjoying that for the past 10 months. But that's also starting to show up in other areas of the economy. And so the Fed has been, let's call it, warming the audience up for these moves on higher interest rates. The challenge though is that the broader market, so the stock market especially, doesn't want to hear that story yet. They enjoy these low interest rates. That helps create a lot of business investment, business room for growth there. And so, yeah, they're reacting negatively to that story. And that has pulled down broadly across the not only the ag markets, but basically all markets in general. And if anything, ag has been able to fight through some of that. That's what we saw today, for example. You look at the stock market today, off fairly significantly again, but in most of our ag markets, fair amount of recovery today because we also recognize that while ag is tied with inflation, it's not as directly tied as a lot of other sectors here. And so, our corn and soybean prices don't tend to move that much with the general inflation rate. Neither do our livestock prices. And so in that sense, yeah, it's a negative storyline for us, but it's one that tends to have more short-term impacts than long-term.
Well, I think another storyline we can touch on real briefly, just because we still don't know a lot about it, but the talk of the Biden administration relaxing some of those biofuel blending requirements with the EPA. And I know that's also had an effect on our markets here the last week or so. But again, as I said, there's still a lot of unknowns with that. We don't know if anything's going to happen with that, but that's more of us, trading that news headline that's out there in the markets, Chad.
Well, that's the we're definitely, like I say, willing to trade a rumor almost immediately, going back to our earlier discussion. But you also think about it, yeah, there was a discussion about, relaxing that for the refiners, but there's also within, the most recent announcement from USDA, some support also coming to our biofuel producers, coming still through the CARES Act type of approaches to support industries as we've struggled financially with the ramifications of the COVID crisis. So it's a mixed bag in terms of the policy prescriptions we're seeing right now out of the Biden administration for biofuels. That said, when I look at the sort of fundamentals, what we have continued to see, especially over the past 5 to 6 weeks, has been very strong corn grind through our ethanol plants, producing a lot of fuel right now. And that fuel is moving very quickly through the transportation space. So we're, from a, let's call it from a usage perspective, the ethanol industry is getting really close to where it was pre-COVID.
Another thing, though, that we need to talk about, it's kind of been that million pound gorilla in the room here for the most part as of late, is weather. And that weather story is very, very key. And we have all these other elements as well, but weather has been the hot topic. This impressive drought in the northwestern plains and the northwestern corn belt. I think I saw the data from Iowa State here recently. Like the crop districts, the driest on record in 129 years for most of those crop districts. I mean, that's unprecedented when you stop and think about that. And we talk about this, and we know that the drought's really bad in the Dakotas, but things are starting to get dry in Iowa and southern Minnesota. And we start talking dry weather in Iowa in June, which is the major corn producing state, soybean producing state. Then we're talking some major issues, and nothing against our Dakota growers, but I mean, this is ramping up the drought story and the weather story even more. What are your thoughts on what you're seeing for weather, not only in Iowa, but just in general throughout the Midwest?
Well, Jesse, I thought you did a really good job, especially summarizing the national picture. Because I think another part of the volatility we've been seeing here is it is trying to weigh, okay, what's happening in the northern or western corn belt, and you can basically sort of divide it where I-80 runs. The idea is if you're north and west of I-80, the idea is we're seeing incredibly droughty conditions that are going to have some very detrimental impacts on crop production there. As you look south and east of I-80, more normal weather where we're looking at the potential for trend line to above yields. And so, especially a state like Illinois sort of shows the difference. If you look there, the idea is the far northern two tier, three tiers of counties, significant drought, the rest of the state looking okay. And so, I think the market is trying to wrestle with okay, if we do see Iowa in play in terms of the drought and major impact there, but Illinois and Indiana are doing okay, well, do you get enough, let's call it extra production out of the other two I states to offset a lot of the losses that Iowa might face? And that especially depends upon what Iowa can produce right now. So as we're looking at this crop, dry right now is a major concern because you're establishing those genetic markers, if you will, for the number of ears per, per plant as we're looking out there, the ear length, the kernel depth, the things like that. And so dryness now has long-term impacts for the crop, even if we do get rain later in the season. And I think that's the biggest uncertainty right now is that we really can't see that damage until we get much deeper into the season. Given that agronomic uncertainty, that's being translated into market volatility. And that's why a lot of the action, I would argue, in the prices over the past, especially 2 weeks, 3 weeks, has been trying to get a gauge on how much damage is being done to that, to not only the Iowa crop, but everything north and west of us as well.
Well, Chad, I know you travel around the state of Iowa quite a bit. You talk with farmers all across the state. I guess I'll ask the question here, just from your perspective and from what you're hearing from farmers. Are we at a point of where we're almost at no return in this corn crop with how dry it is, with no subsoil moisture, or do we still have a little time to hope to maybe catch some good rains in the next 2 weeks?
I think for the most part, it's still we have some time, but we definitely need moisture very soon. When you look at the crops, the idea is for the most part, they look, I'm going to argue, surprisingly good given the dry condition that we've got out there. As you mentioned, the drought indices would indicate this is about the worst we've ever seen in June. Yet when you look at the crop, even the crop conditions report the USDA is releasing from week to week, it's still showing a majority of this crop in good to excellent condition. But the idea is we're only one long, hot, dry stretch away from seeing significant impacts here to really start to reduce this crop down. Now, that said, the further north and west you move from me here, the more dire the situation becomes. And so I think, especially as I look in Iowa, northwest Iowa especially, has been in extreme drought now for the past couple of months as we think about the growing season. And so that's a crop that has continued to have to work and struggle just to produce right now. And so I would say we're almost at, up there, probably, we're approaching that point of no return. For the most of the rest of the state here, we've got a little more cushion because we have had just enough periodic rain to keep that crop in a good spot where it can take off if it does rain.
Well, Chad, we look at all those legs of the stool of the market right now, and of course, I'd say the fourth one that we have in front of us is that June 30th, stocks and acreage report from USDA, and I would have to think moving into that report, it's going to be very interesting to see the next couple of weeks what happens with rainfall and everything else, because I mean we're going to be watching that and the volatility there, and then moving into that report. I'm curious to see what USDA does with acreage, where we're at. I mean, are we going to see any changes? And I'm curious what your thoughts are on what we could see from USDA, if you've heard anything or have any thoughts as we head into that report.
Well, of course, we haven't heard anything officially. USDA is pretty good about keeping that invest until they, release the report. But I think when we think about, okay, what private analysts have been saying basically since March is that almost everybody, I think, is expecting additional acreage to appear in the June report. And especially given the drier conditions that we had, it does lend itself to, let's face it, more rapid planting, which we definitely saw earlier this spring, which tends to lead to usually additional acreage. I think we're going to see that number go up, but I think if you will, the market's already prepared for that. They've baked that in. This becomes more this case of where did that acreage grow? Where were the shifts? And there we're going to be lining up that acreage movement with the drought map. So the idea is if we're seeing that growth more eastern corn belt, well, that could mean some bearish pressure there, that we're adding that area where the crop has the better potential to really produce. On the other hand, if we're seeing a lot of that growth up in the Dakotas, a lot less pressure, just because, yeah, we got the acreage, but the yield potential we know is severely diminished as we move forward. So I think that's going to be the critical thing here, not the overall acreage number, but where the growth is relative to the drought.
Well, of course, that world supply and our U.S. supply, we're watching tight stocks there with corded soybeans, and we know that Brazilian safrinha corn crop is smaller and shrinking, and we've kind of stopped talking about that story a little bit in the news, but it's still out there and prevalent, and obviously shipments have remained strong as we're shipping out to China, a lot of their purchases. Talk about what you're seeing on the demand side and how tight our balance sheet is and what we could see moving forward, Chad.
Well, that's the deal. I think when you look at global demand over this past year, it has really helped tighten that ending stock level down. As you mentioned, the idea is as we're looking at old crop corn and beans, we're looking at record for both going out of the country here. And, in terms of the shipments, soybeans has always been running a little bit ahead of usual in terms of that. So that, there was never much concern about cancellation there. Whereas with corn, we've had a significant gap between our amount of sales and our shipments. But as you mentioned, that has been catching up very quickly. And in fact, looking back at this week's report, that was another thing that USDA pointed out is that shipments remain strong for the corn market right now. And as we look forward to the 2021 crop, what we've been seeing, especially in the corn market, has been some additional demand pressure starting to build up for new crop corn. So, here we are worried about producing this crop because of a drought, and yet we've already sold about 600 million bushels of corn out into the international market for after harvest. So that is a incredibly strong number this early. The vast majority of that is China. So we continue to see the Chinese market sort of being the leading signal here. When they're buying, life is good, things are going higher. When they back off, we don't tend to have enough, let's call it global support, to push prices higher without China.
Well, Chad, flipping over to livestock, I want to touch on that just a little bit before we run out of time here. On the cattle side, this week we have had a pretty solid rebound this week with the lower grain prices. Friday was a little more mixed, but we are seeing cash activity start to trade a little bit higher in feedlot country now. We know cattle have been struggling. We know they've been at a discount here. Looking at this cattle market, though, what are your thoughts as we've seen a decent week here this week and we're moving here into the back half of June?
I almost want to refer to it as the little engine that could, but it's a bigger engine, let's face it. It's the cattle market. But the idea is, especially when you look back over the past 2 months, what this market has slowly but surely been doing is building up that price for fed cattle out there. And eventually I think we're going to continue to do that as we look deeper into this summer. We know demand is strong here domestically. It is at record levels internationally. I don't think there's any question about that. It's more let's call it the capacity of the industry to move those animals through the market and create that beef that is so desperately desired by consumers around the world. And so that has been slowly but surely leading to some better prices for our cattle farmers out there. And it's something like I say, I'm expecting to continue to play out over the next couple of months.
On the flip side, hogs, we've seen record prices here. We've really just had a rocket attached to the back of this hog market. But now folks are starting to wonder, have we reached the top in this market? Are we just simply correcting to run it higher yet again? What are your thoughts? Have we found a top in this hog market, Chad?
I think for the short term we have, because as you mentioned, the idea is we took off. In this case, the hog markets looked a lot like the crop markets. They've had an incredible fast run up. It was built on the strength of that international demand. And when we saw some weakness in that demand, that's when we've seen this pullback. And I think there's still some concerns about that as we're looking forward. Again, especially the linkage with China. China had been that growth market over the past 2 years. They've backed off as they've started to rebuild that herd and reestablish their pork industry. We have seen some other markets pick up, specifically as I look at the data. Mexico's been stronger this year. Canada's been up a bit, but probably the biggest areas have been like the Philippines and Colombia. So we are seeing some growth markets out there, but they're not enough. I can't cobble enough together to offset the losses we're seeing right now with that Chinese market. And I think that's going to take us down for a little bit until we see, how well China has rebuilt. If they need to pull some more pork in, that would relight that fire underneath the pork market.
Well, Chad, it's been a wild week in the market trade, and I appreciate the insight as always. Any final thoughts you have for us? Maybe any advice for our farmers and ranchers out there listening in as far as their marketing and just anything they could maybe keep in the back of their mind moving through all this volatility?
Well, as we're looking at this volatility, for example, on the crop side, the idea is that droughts do tend to mean higher prices, and we've definitely seen that, but it also tends to mean higher volatility. And so it's a matter of, I would say, putting in some price protection moves and then stepping back for a while. We can't get caught up in the day-to-day machinations of markets up, markets down. The idea is we need to put in some price protection at levels that we know are comfortable and are profitable for our farms, and then let them rest. The market's going to react dramatically over the next few months. We know that because of the weather conditions and the international uncertainty. But trust in that if I make that, that profitable move today, it's still profitable as I look down the road. And the same thing is actually true when you look at the livestock industry. For the pork market, for example, we're still at very strong prices. So if I'm looking to put in some price protection right now or lock in some margins, now's a good time to do it. What we can't get caught up in here is the ego of wanting to say, I captured the market high, because you almost never do, even when you're really trying hard. It's one of these deals of, though, if you can sit there and go, nope, I've marked in a profit today, and I know I've got that locked in for the next 6 months to a year, that's a very comfortable feeling where you're sustaining your farm because you've got that money coming in, and it's more than enough to meet the needs on the farm.
Well, Chad, again, I appreciate the insight as always and the time. Head outside, do your rain dance again, wash the vehicle one more time, and we'll hope for some rain there for our farmers in the Midwest. And of course, I appreciate your time as always. Enjoy the weekend. Thanks so much, Chad.
Thank you, Jesse. Always pleasure to be with you.
Chad Hart with Iowa State University, our guest today here on Market Talk, brought to you by GrowMark FS. Find us online, markettalkag.com. This was the Friday, June 18th edition of the show. I'm Jesse Allen, wishing you a great afternoon and a great weekend.